who actually called the fall first when we were celebrating the near 9,000 mark. Sanjay Dutt was telling us that this is the peak and we should see much lower levels from here on. They've already seen the peak for the year, is what he told us, and that's how it's played out. So Sanjay, good morning, welcome to the show. What's the call now? Do you think we have much more to lose from current levels?
See, I can't really give a call on absolute levels, whether we'll bottom out at 7,900 or 8,000 or 7,800. But I think one thing I can say confidently that the risk reward is favorable now. Okay. I would be a buyer. People should start to buy. Look at stocks where we have high conviction rates in terms of fundamentals, in terms of ability to really make use of the turnaround when it happens. So I would say the risk reward is favorable, and even I would hazard a call by saying that even the index I don't think will fall more than 200 points in the Nifty, or maybe max 7,900. It gives me a lot of confidence. And people missed out the governor's entire speech yesterday, and I think it was a landmark day from the RBI side. Because if you look at it, people were just focusing on that 25 basis point, but they missed out the stuff that he sent a message clearly on things like the MSP, things like, what the government needs to do to revive the investment sentiment, government investment flows. A lot of other issues he spoke about, things about simplifying banking in terms of clearing up the entire mess that RBI is about, the entire gamut of circulars, He'll definitely go down in the history as one of the best governors we've had probably in the last many decades. So people are missing that. We will just continue to focus on that 25 basis point because, that 25 basis point gets lost in transmission only. When banks start to transmit it, what do they do? Because each bank's own asset liability position, NPLs, etc. So if he did 25 or he did 50 and we're still living with this mess of NPAs with banks not being funded, it wouldn't have made a difference. So people are just missing the wood for the trees really at this point in time,
Take your point, Sanjay. Actually, well, just to a bit of self-advertisement, I did write a piece today in the Mint on the non-monetary content of the monetary policy. Maybe on some issues. No, it's okay. We'll take that off cap. We'll take that off cap. I just want to know where would you start picking? Would you now look at the non-cyclicals? Would pharma IT be your pick?
I think IT, yes. Pharma, I've always been a dunce. I've always said that, I can't get pharma right. So I just don't know when, FDA will hit or which, formulation will hit. So IT, yes. That's one area where I would like to invest because my call is that, which has been for a while, that rupee dollar is going to pan out, where rupee will depreciate, and we're very clear. Even the government, if you heard Arvind Subramaniam a few weeks back, gave a clear hint that, rupee will weaken. Government is comfortable with rupee weakening, both in terms of the Make in India as well as the export initiative. So if that be the case, I think IT is the place to be. And also I'm seeing a new vigor coming in some of the IT companies, particularly Infosys, for instance. Of course, I'm not long Infosys at this point of time, so I'd like to make the disclaimer. But I think IT is one place that looks good. Oil and gas, Reliance we've seen outperforming for the last few weeks. I think that's a big play. And look at it today, if 3 or 4 rupees diesel goes up, no, it's not even news. I don't even find it in any column anywhere in the newspaper. So we've got used to it. So therefore, oil and gas sector, specifically Reliance, IT, I think focus will shift on these 2-3 sectors, and these will give support to the Nifty at the current levels.
Okay, by the way, just keep an eye out on the bank Nifty. It's now down more than 1%, and at the lowest point of trade, names like ICICI Bank, PNB, Yes Bank are all moving towards cuts of almost about 2 to 2.5%. So it's getting worse for the bank Nifty. Sanjay, hi, good morning. It's good to hear some bullish views from you after a long time. I mean, you've been cautious on the markets for so long, and now some optimistic views. But having said that, how would you approach a space like banks? Because the selling pressure has exacerbated in the last couple of weeks. Is this a good time to be accumulating, or do you think we could get better levels in the days to come?
See, Sonia, we are all very clear that you can never get the bottom, you can never get the top. And I think, like I said, about the risk-reward equation for the market, I think the same applies to the banking sector also. At this point of time, we are, we made the banking sector in India a basket case. I don't think it's that way. So therefore, I think there is opportunity in there. There's selective opportunity in there. I would be a buyer. I would be a buyer of select bank stocks, particularly select PSU second-rung stocks, or even in fact a bank like State Bank of India, because I think things are going to get sorted out, and they already are being sorted out. They all, if you go and meet any senior manager above the level of a general manager in a public sector bank, the way he's on his job from 9 in the morning and 9 at night in trying to sort out every possible NPA, in trying to look for new business, good quality new business. There is a new vigor in there. They know they need to sort this out, and the message has gone on very clearly from the top management. So I would be a buyer here, to cut a long story short. Yes, I would like to scale my buying. I wouldn't want to go one shot and finish all my entire banking allocation. But I'm a buyer, definitely, no doubt. I think the selling is more or less done now.
Yes, there is some slow but quiet reform happening in the public sector bank space. I mean, if men like Sumit Bose and Balachandran were to become chairman of these public sector banks, I would expect something positive from these kinds of moves. But Sanjay, what about the FMCG space? I mean, we just were discussing about the Emami purchase of Kesh King. There are these pockets of FMCG stocks that have actually shown a decent amount of value and volume growth over the past year, which would have been difficult for them. Are there any nuggets in the mid-cap space that's attracting your eye?
I think there are many, because this whole space is changing. Why? Because you need to be focused on fleet-footed players. The bigger players, I'm not saying, there is no market for bigger players. There's no market in my portfolio for the bigger players like a Nestle or a Unilever, But I think a lot of these second-rung players who play in tier 2, tier 3 segments of the market in the lower price points are actually quietly and stealthily, building market share, are improving their margins. They're all ultra-conservative and, really family-managed companies, even if they're probably listed. So I think that's where the opportunity is. Obviously, Emami is one of them. And we've seen the story of Dabur panning out in the last 10, 15 years. No one thought Dabur would be a challenger to the bigger players. But the way Dabur came on, and now it comes in the big league. So I think a similar thing one would find in a lot of other companies where one can go and look at and buy and study them carefully and see what their market shares are. But of course, they would still be under the cloud because, if you're going to live with this issue of rural consumption, monsoon and these kind of problems, next 2-3 months you would see a problem with the FMCG sector. People would wait and watch. Of course, taxation, GST uncertainty, those kind of things are also going to play on them a lot. So maybe you do get a better time to buy them, or maybe you may have to wait out a little. The price may not fall, so you may get an opportunity to buy them a little later.
Do you think the story in the auto sector has played out, at least for the near term? I mean, things have been sluggish, but stocks have moved up a lot. Do you think the time has come to move autos to the back burner now?
I wouldn't say move them to the back burner, but I would be equal weight as far as my portfolio is concerned, because I can't have a portfolio without having an exposure to the auto sector. But would I want to increase at the current levels? Would I want to increase them in case they fall with the market right now? If the market were to fall 200, 300 points? No, I don't think so. I think there are better pockets there where I would like to be overweight. But would I not want them in my portfolio? No, that's not the case. I would want them. I would want an allocation in them because they're not only a play on the entire rural consumption theory, but they're actually a play on the entire growth story of India. Whether it's aspirational or otherwise. So therefore, I would want them in my portfolio, but I wouldn't be overweight, to cut a long story short.
Okay, and the big monsoon story. Sanjay, you're a seasoned player of many a drought and flood cycles in the markets and in the economy. How much should one give weightage to it, and how should a stock market investor approach this impending phenomenon?
It's very difficult to game, Lata, because, monsoon's got to do with the distribution factor, how well it goes across the country, which are the belts that are impacted. Even right now, there are two views. If you look at the SkyMet and the IMD view, we've also had years, in fact, just yesterday the governor reminded us, we've also had years where monsoon has been below normal or below the acceptable level, but we've still had good growth. We maintained good growth. So I'm confident about one thing, that if there is one period where we can manage with a drought, if we have to live with a drought and we are compelled to live with a drought because it's a natural phenomenon, it's this period. It's because the leadership that we have, both political as well as what we have in the RBI, they cannot be a better combination. I think I have no doubt about the fact that what the Narendra Modi government will get down to it, if we have to get down to it and get going, as we've seen it reacting to some events in the last few months. Maybe those were very smaller events, the Nepal earthquake, etc. But I think there's no way that the government is going to sit back and let the rural economy suffer and then let the farmers suffer. They're definitely going to come out with aggressive contingency plans. They must be already working on it. So I'm reasonably confident that if we do have a bad patch this time because of nature God not being kind on us or whatever scientific reason, El Nino, blah blah blah, I think government would tackle it this time. So therefore, the impact would be quite muted on growth, on consumption, etc. So we are quite well positioned. I'm not that worried. I think it's being played out a bit too scarily, and it's come as a combination along with the RBI policy plus minus a day or two. So therefore, markets are tad nervous about it.
Fair point, Sanjay. I take your point entirely that ultimately governance, whether it's corporates or countries, is what's going to matter, and we are in a very good spot on that issue. Thank you very much for joining us and giving us your macro and your micro perspectives. Okay, on that positive note, let's head into a